So I'm Ariane Kaploun. I'm working for AXA Climate on de-risking solution for nature-based solutions. And also I'm part of another European consortium, which is called PISA. CMCC is also part of PISA. And I think the purpose of PISA is actually quite close to the one on Naturance, because it is to design new insurance solutions for forest assets, agriculture assets, and city level, integrating adaptation solutions into the insurance design. So we just started, so let's see where this takes us. But yeah, very happy to have this connection with also Naturance. So let me just share my screen. Okay, can you see my screen now?
Yes.
Yeah. Perfect. So I think it's perfect to speak after Svenja, because I will just provide an additional point of view on, even if I agree around the complexity of this question of insuring nature and all the risks that also can be generated by nature, we are just tackling a little pieces of this question, and this is what I'm going to present you today. Just before deep diving into the topic, a few words on AXA Climate, because I think it's quite interesting to understand the journey of us starting from pure insurance and what we're doing today. So AXA Climate was founded 5 years ago now. It's part of the AXA Group, the insurance company. And we started with parametric insurance against natural disaster. So we are covering public or private actors against flooding, drought, cyclone, any kind of natural catastrophes. And then a couple of years ago, we decided to move up the risk value chain to rather work on adaptation. So we have today other business lines, which are training and consulting mainly. So training, we provide content around climate and other environmental risk to the training platform of large corporates. So, we raise awareness on these topics. And on consulting, we were first doing climate modeling, essentially integrating future risk scenarios. So helping our clients understand how this future climate risk will impact them in 2030, for instance, 2050. And then what are the adaptation solutions that they should deploy today to improve their resilience and reduce their vulnerability. And I joined 2 years ago now to address a new segment, project developers or investors into nature-based solutions. And why we decided to, we gained interest into the topic is because first, a lot of our clients actually are asking us, so what are the best adaptation solutions that we could develop, etc. And it's pretty clear, and I'm sure this is also the purpose of Naturance, that adaptation solutions based on nature limits significantly maladaptation because of all the coded benefits that are generated. On the other end, we tackled more and more climate and biodiversity risk together. We see in the modeling, in the reality on the ground, that the two topics are really related. And so promoting nature adaptation is also a way to answer both this climate and biodiversity issues. However, Svenja mentioned it, it's not simple. Nature becomes a new asset class, but it's still very nascent. For investors, there is so many challenges, right? And I don't know if you have in mind this UNEP study that was published some years ago, and they evaluated that to reach the common objective regarding nature, more than $4 trillion are necessary by 2050. And today, 80% of that is supported by the public sector. So it's quite obvious that we need absolutely to attract as fast as possible the private investor into nature conservation. But there is no or a few financial return on investment. It's rather difficult to actually know exactly what is the value that will be generated after a conservation project or a restoration activity. There is not the same level of understanding for the developers and the investors, so they're not speaking the same language. So etc. etc. So as an insurance company, we think that our role today is actually to provide this de-risking option and to bridge the gap between investors and developers of nature-based solution. And insurance is definitely not the answer. The answer is a financing mechanism. And insurance is just, a piece of the answer triggering faster this financial mechanism. So what can be done? So there are many risks. I just mentioned a few, but basically we decompose into three kinds of risk. Internal risk to a project, which is basically management default that could happen. External risk, for instance, related to political issues, and natural risks. And attacks on climate, this is the natural risk, the climate risk. This is what we know how to cover. So we do a parametric design. We used to do it for corporates, for the public sector. And so now we are adapting this to natural assets. So there is a few use cases now. So on the coral insurance, there is at least 3 different use cases on the market. Several of them in Mexico. We are insuring the MAR fund. So the MAR fund is a trust fund taking care of the Mesoamerican reef. And there is a whole process behind it about coral restoration. And so that's why the insurance is relevant here, because in case of a cyclone, the money will be directly, there is a process to use the money and restore the reef. And why parametric is particularly interesting when you are covering a living ecosystem is that it allows to trigger fast money. And the faster you answer, the less damages there are. Because for instance, going back to the example of coral, after a cyclone, the little corals are moved away, but they are still living. So if you're able just in a few days to send people and see and reattach the corals, they won't die, which can really make a difference on the resilience of the ecosystem. So the key question also to raise on the insurance side is how do we make that sustainable on the long run? And what are the financial flows that can be used to pay for this insurance, climate insurance over the long term? Because the difficulty with the MAR fund, and going back to the notion of scalability that Svenja mentioned, is that if you find a premium financer just for a year, it won't be quite relevant, right? Because climate insurance for nature is a bit like health insurance for people. I mean, you want to be covered over the long run and not use it. But if you just have the insurance cover for a few years, you will probably just lose your money because nothing will happen. And when you will face a major climate disaster, it is when you need the insurance. So I think what is at stake today is really to find some financing mechanism to pay for this cover over the long run. And this is why we have also evolved a lot in this. So we started with the MAR fund, and the insurance premium is actually paid by partly by ISF, which is from KfW. So in 2 years period, it's supposed to be taken over by the hospitality industry, but it's not done yet. So let's see if this will succeed. Then we have another use case with Blue Finance, which they used to be an NGO, they are now a social business, and their approach for nature restoration is super business oriented because they are deploying economic activities on site, such as aquaculture, sustainable fishery, ecotourism, and they use the money to pay for patrols, for marine scientists, and for watch over the natural ecosystems that are present into those marine protected areas. So there is this stability in terms of financial cash flows. So here the insurance cover has been designed to protect the whole marine protected areas and not only the corals that are there. And it is the MPA manager who will decide how to best use the money after a cyclone passes. So he can choose to indeed send people underwater, to replant the corals, but maybe also pay for a boat, because this is the urgency, to patrol and evaluate the damages. And then a third use case, which is very new, it's not published yet, is another approach which is much more integrated to the community. So we've been working on a project that started 4 years ago, I think, selling carbon credit for mangrove protection. And this functioning is based on the community which lives in Yucatan in Mexico. And they have deployed some ecotourism activity to visit the mangrove. So the whole community life is actually around mangrove protection. And so they decided to also generate carbon credits as an additional revenues. And here at first, because there is also this whole fuss about carbon insurance, we were asking ourselves, okay, should we provide a carbon insurance and insure the carbon credits of this community in case there is a cyclone and so loss in the permanence of the mangrove? But actually, after discussion, we decided to, a bit like Blue Finance, to rather insure the community directly, and they can choose. They will be able to choose how to best use the insurance payouts in case a cyclone passes by, knowing that all the activities of the community is for mangroves health and protection. So yeah, just a few use cases around climate insurance, but this is just a piece of the solution, and there are a lot of other insurance products that are needed for nature resilience. There is also other solutions. This is consulting actually. So here what we can do is actually, when the project just started, either it is for due diligence for investors or for project developers to make sure that their plan is resilient enough, we can do this risk screening, also integrating future risk scenario to help evaluate how in the long term the nature-based solutions will be resilient to climate disaster. And indeed, it's particularly interesting because when you are replanting a forest, for instance, you're not doing it for 5 years. Normally, you're doing for 50 years, 100 years in best case scenarios. So over this period, you will see a lot of climate pressure, a lot of climate change, and maybe the species that you were planning to use in a specific area won't be adapted actually in a 20 or 30 years period of time. So this is also something that we are working on with project developers. And another interesting de-risking mechanism is also to work on the value and cost benefit analysis of nature-based solutions versus gray solutions. And actually the results are, without questioning. For instance, we made some cost benefit analysis for mangroves regarding flooding risk, and we compared mangrove with gabion and the dike. And the cost benefits and results for mangrove were like $9. So it means that if you invest $1 into a mangrove restoration wall, you will gain on the long run $9 in terms of flood reduction. With gabion, it was 5, I think, and dike, it's 2. So when you make this kind of exercises, trying to really compare different solutions, it's kind of obvious that nature-based solutions are the most financially interesting ones. And this kind of analysis is actually a trigger for investors to gather, people around nature-based solution and make this project get off the ground. So I will just stop there because we are lacking a bit of time. I can stay a few more minutes for questions, and happy to continue the discussion later on or by email or anything.
Thank you very much, Ariane. Let's see if there are some questions, either online or from people here.
I have one question. Yeah. I wanted to also ask Svenja, so it's for both of you a bit. I'm accompanying the biodiversity net gain law from the UK that is going to start now in November for developers. And I was just thinking about the synergies between BNG and what they're asking from developers there in the UK and the insurance sector. because I saw in your slide, Ariane, that you mentioned that developers are, of course, part of your client base. And I was just wondering, like, I see many opportunities that might, arise there because developers are going to be asked to do the 10% biodiversity net gain for new developments. I was just wondering.
I'm not sure actually to get your question exactly.
Yeah. So
is it biodiversity versus carbon or?
There is this new law that is going to come into force in the UK for developers, and they have, for example, if they have a new development, they have to do 10% biodiversity net gain, and they have ways of doing that. They can do it in their own, let's say, land. They can do it in another land, or they can buy, from the government. They have to compensate in a way. And I was just wondering, relating that to the insurance sector, if you have all these developers that are going to be forced, let's say, to do biodiversity net gain, if you could also, from an insurance side, okay, so you have to have more biodiversity there. If there are new maybe products for, insurance products that can, pop out of this new requirement from the government.
So, so sorry, because I'm not aware of this new law, but what I can say is that probably the question of how you measure this biodiversity gain will be key for developers, and for actors will have to comply with this law. And for insurance design, as long as the matrix is not clear, it's going to be complicated to design new insurance solution for this biodiversity loss or gain. So I think the market is not mature yet to go there, but probably will be. But it also echoes the whole discussion around carbon credits. What are biodiversity credits? Sorry. And the difficulties that we are all facing is like there is no common units on biodiversity credits. Everyone wants, to make their own biodiversity target fit into this, and so it becomes this big complexity around, and we don't have those credits yet. I mean, it's going to happen, but yeah. So with the climate insurance that I explained a bit earlier, with parametric, the functioning is quite simple because we rely on a climate parameter, whether it is temperature, level of humidity, wind force, etc. So if we find a parameter which is reliant enough regarding biodiversity increase or decrease, yeah, it's going to be possible to design some new parametric insurance. But as long as this is not clear about what is a good parameter to measure biodiversity gain or loss, it's going to be complex.
I see. Thank you.
Just very briefly on this, I think that new law at the moment, this is most relevant on the terms of liability. So, if you have an environmental liability insurance and there's a new requirement, so an insurer will look at it through that lens. And maybe just to mention, I know AXA and Marsh in France have actually an interesting approach, because when it comes to development, that tends to be done not on sort of recycled land. I mean, I don't know the term, recycled land sounds horrible, but, sort of on pre-used land is often not ready for new developments. And I think AXA and Marsh have developed also a way to encourage developers to actually invest in basically cleaning up, increasing, the suitability of previously contaminated land. And by doing that, actually protecting, unused land from new development. So, I mean, that was a very simplistic way of describing it. But I think the concept is interesting, because then you have actually a mechanism that encourages and provides protection for developers who want to do that.
Thank you.
Well, thanks a lot for that addition. So I think, given time's sake, we have to conclude this session here. But let me give my thanks also to Ariane and to Svenja for these talks. That was really excellent. And what we'll do is we'll start again around 1:30, so that we can have the lunch break now.
Thank you. Bye all. Have a good lunch break.